All right, let's get into it. Today, we're going to tackle a document that, let's be honest, can look pretty intimidating. The Quarterly Earnings Report, also known as the 10Q. But our goal here is to completely demystify it. We're using Globe Life's latest report to show you how pages of dense financial numbers can tell a really clear story about how a company is doing, what its foundation looks like, and where it might be headed.
Because that's what this is all about, right? It's not just about reading numbers off a page. Anyone can do that. The real magic is in understanding the story, the narrative that those numbers are building. Is it a story of massive success, quiet stability? Or is there something a little more complicated hiding just under the surface? For Globe Life, we're about to find out.
Okay, so here's our game plan. First up, we'll look at the headline numbers, the story of a really strong quarter. Then we're going to decode their profit engine to see what's actually making it run. After that, we'll do a quick check on the company's financial foundation, just to see how solid things are. And then, here comes the twist. We'll look at the storm clouds of litigation that are starting to gather. And finally, we'll wrap it all up with the 3 key things you should walk away with.
So let's start with that big picture. When you first look at Globe Life's third quarter, one thing just jumps right out at you. On paper, this company had a fantastic 3 months. The main number, the one that always gets the attention, is net income. And boy, does it tell a story of growth. A 28% increase. I mean, that is a huge jump in profit for a company this big. To put some real dollars to that, their net income shot up from about $303 million this time last year to almost $388 million this quarter. That is exactly the kind of year-over-year growth that gets investors very, very excited. And seeing it like this as a bar chart really makes it hit home, doesn't it? You don't just hear the percentage, you can actually see the growth. On the left, you've got last year. On the right, this year. That leap is just undeniable. But this only tells us what happened. The far more interesting question is, why did it happen? And to answer that, we've got to go a little deeper.
So, how did they pull this off? It's time to pop the hood and decode the profit engine. To do that, we're going to look at something called the Statement of Operations. This is where we get past the flashy headline number and really understand the mechanics of how Globe Life made its money.
And before we dive in, let's just make sure we're on the same page. The Statement of Operations, think of it like the company's report card for the quarter. Super simple. It shows all the money coming in, that's revenue. Then it subtracts all the money that went out. Those are the expenses. And the number left at the very bottom, that's the final grade, the net income, the profit. That's it.
Okay, now this is where it gets really interesting. Look at this table. The top line, total premium revenue, that's the money they make from insurance policies. It went up. That's good. Investment income, the next line, was pretty much flat, so revenues are up. But that is not the full story. Not even close. The real kicker is that third line I've highlighted, total policyholder benefits. This is the money the company paid out in claims. And it didn't go up. It went down by a lot. From $688 million down to $617 million. For an insurance company, paying out $71 million less in a quarter is a massive boost to the bottom line. The report mentions this was partly because of a remeasurement gain of almost $150 million, which is basically an accounting adjustment. So you've got more money coming in and, this is the key, a whole lot less money going out. That's what supercharged that 28% profit growth.
So a great quarter is awesome news. But anyone who's been around knows that one quarter is just a single snapshot. To really understand the company's long-term health, we need to check its financial foundation. And for that, we turn to the balance sheet. And again, let's keep it simple. A balance sheet basically has 2 sides. On one side, you have assets. That's all the stuff the company owns that has value. Think investments, cash, things like that. On the other side, you've got liabilities. That's everything the company owes to somebody else. For an insurer, the biggest one is the promise to pay out future benefits to its customers.
And what we see here is a really healthy trend. If you compare where they are now to the end of last year, total assets have grown by about $1.5 billion. Now, liabilities grew too, but assets grew faster. And the result is that number at the bottom, total shareholders' equity. You can think of that as the company's net worth. And it's up by nearly $400 million in just 9 months. This shows the company isn't just having a good quarter. Its whole financial base is actually getting stronger.
So far, the story sounds amazing, right? Profits are way up, the foundation looks solid. But this is exactly why you have to read the whole report, not just the big numbers at the front. Because when you dig deep into the footnotes, into a section called Commitments and Contingencies, the whole story takes a sharp, dark turn. The now what for Globe Life is suddenly complicated by some really serious legal problems. This one sentence pulled word for word from the report, it kind of changes everything. This is part of the description of a class action lawsuit filed against the company. It directly attacks that beautiful financial picture we just painted. It alleges that the company's own statements about its performance were, and I'm quoting the lawsuit, materially false or misleading. That's a huge claim.
And this is where the story of Globe Life's quarter really splits in two. You have this stellar financial performance on one hand, and then this growing list of really serious legal and regulatory risks on the other. So let's unpack what these challenges actually are, based on what the company itself is reporting. Yeah, the company is fighting on a lot of different fronts right now. As you can see, there's that securities class action lawsuit, there are related shareholder suits, and there's a federal investigation by the EEOC. The lawsuits are about those misleading financial disclosures we just talked about. The federal probe, on the other hand, found reasonable cause to believe some of their agents were misclassified and subjected to discrimination. The company says it's going to vigorously defend itself, as you'd expect, but these are not minor issues. They cast a pretty significant shadow over the company's future, no matter how good this quarter's profits were. Okay, we've seen the big profits, the solid foundation, and those gathering storm clouds. It's a complicated picture, for sure. So let's boil this whole thing down to the 3 key takeaways you absolutely need to remember. This is the story in a nutshell.
First, the profit growth is real, and it's impressive. A 28% surge in net income is a big deal, driven by more money coming in and, crucially, less money going out in claims. Second, the company's financial foundation looks pretty solid. The balance sheet shows that their assets and their overall net worth are growing steadily. And third, all of this good financial news is happening under the shadow of some pretty significant legal risks. These allegations of misleading disclosures, discrimination, and misclassification create a major cloud of uncertainty.
And that leaves us right here with the central question of this whole thing. On one side, you have this financial engine that is just humming along, performing incredibly well. But on the other, you have these legal challenges that call into question the company's practices and its disclosures. So which one of these powerful, competing stories is going to win out and define Globe Life's future? The answer to that? Well, it isn't in this 10Q. Only time will tell. Thanks for joining me.